Hi Antonia, thanks for speaking with Blue Notes. How are economic conditions in New Zealand at the moment, and do you see any differences with the cycle in Australia?
Australians are asking that all the time. We've got this reputation of being the canary in the coal mine that Australia can look to and see what might happen. I mean, what's certainly happened is that we've hiked interest rates faster and higher, and so we've got our cash rate sitting at 5.5% at the moment. The Reserve Bank signalled that was probably time to watch, worry and wait. Our economists do think there's another single 25 basis point rise in it. Definitely conditions are feeling tighter. We're watching very carefully people who took out home loans during that time when interest rates were particularly low. So they've probably got a new home, it's a high LVR. They thought they'd be paying a much lower interest rate than they are now. The good thing is that we were testing them at a much higher rate than they paid. Actual rates in the market have exceeded that now though. But there's a lot of good management, I'd call it, going on. We've seen people, they've been getting pay rises, they've been saving more over the course of COVID. We've done some stress testing on the book that says, look, there'll absolutely be some customers who are finding it really difficult, but it's a manageable number. So we feel comfortable that we've got the capacity to really help them through. That will change if there's another significant series of hikes, so let's hope that doesn't happen. In terms of house prices, they're off about 16% in total. It varies around parts of the country. The thoughts are that we've seen that bottoming out now. Business conditions, confidence is picking up a little bit, but the inflationary, cost of doing business, cost of living, that's impacting everyone really significantly.
So how is that translating for retail and business customers in New Zealand? Are you starting to see those interest rate rises impact the lending markets?
Yeah, well, business that has been pretty quiet for a number of years now, definitely since the outset of COVID. Higher interest rates certainly doesn't help that, although we're seeing a little bit of confidence return. Definitely in the commercial property and types of spaces like that, we're watching carefully. We're a big agri lender in New Zealand, and on-farm costs have increased significantly. On the home lending side, it's been the quietest, the first 9 months of our financial year, up 2% odd the market has been, which is the quietest it's been for years. So we're seeing some green shoots of it getting a little bit stronger in the last couple of months, but it's been really, really quiet. It takes a while, I think, for people to get their heads around what does it take to set out on such a high interest rate compared to where we've been for the last 4 or 5 years.
And it's been a pretty tough period in New Zealand with a string of natural disasters. How has that been, and how are we helping people through?
Yeah, it feels like the plague of locusts is going to be next, honestly. We've had floods, we've had winds, we've had potholes in roads. It feels like it's never ending, and it's particularly impacted sort of Auckland and Northland with the anniversary weekend floods, and then Cyclone Gabrielle in the Hawke's Bay and Gisborne. So I was down in the Hawke's Bay a couple of weeks ago, really tragic to see, apple orchards where halfway up the trees, the apples are still on the trees because they'd been flooded and couldn't be picked, and so only the top half of the trees could be picked. So we, really came out to support our customers as much as we could. We donated about $3 million to various charities that were helping the flooded area or the impacted areas. We did some initial sort of interest-free temporary overdrafts, those sorts of things to help people through the cash flow period of time. And now we've got to the stage where businesses are probably more in a position to work out what the future looks like for them. So we've just launched what we're calling our business recovery loan. Now it's been launched for the weather events in the North Island this year, but the difference is it's actually going to be evergreen. It's a fund of $250 million at a low interest rate. Currently it's a fixed rate of 3.49%. That is available for this series of weather events, but it will sort of be ongoing, and it'll be available for things in future, because I think if there's one thing we've learnt, that climate change is a reality, and we're going to find ourselves with more of these events going forward.
And it's an interesting time from a competition point of view as well. Can you share your thoughts on the competition regulator's inquiry into banks?
Yeah, absolutely. So they've announced a market study, and it's into personal banking specifically. Look, with the cost of living going up so much, you can understand why people are questioning bank profits. The key thing that it's really hard to understand in New Zealand, ANZ reports a profit of $2 billion. That's a lot of dollars in anyone's sense. I think what is not so widely understood is the scale of our business. So from a profitability sense, we're about at the average of the NZX return on equity in the market, so about the median. So what this, we'll cooperate with it. Obviously, we're just in the middle of a big information request from the Commerce Commission, but I think this gets us an opportunity to put the facts on the table. There's a lot of sound bites out there, and so we welcome the opportunity. It's a really competitive market. We've got all sorts of models. We've got the big four Australian-owned banks, we've got a government-owned bank, we've got community-owned banks, we've got banks owned by large global banks. So there's a really good shape of the market in terms of all different types of structures, and I think that makes us really competitive.
So our New Zealand business provides diversification for the broader group, but the business itself is quite diversified. Can you talk to us about the benefits of that?
Yeah, I mean, we're the biggest bank in New Zealand. We cover the whole economy. I always say that when the New Zealand economy is doing well, we do well, and when it's not doing so well, we don't do so well. We have a business from large to small, so we have a really strong institutional business. The great thing about being part of the ANZ group is that our institutional businesses can leverage that global network that we have and really capture the trade and capital flows in and out of New Zealand. We've got a strong agribusiness. I mentioned before, it's tougher times at the moment for them, but that's an incredibly important part of the New Zealand economy. We've got 2 million retail customers. It's fantastic to be having the ability to impact the financial well-being of all those Kiwis, and we've got a strong commercial business looking after sort of the privately owned businesses around New Zealand. We're a nation dominated, I guess, by small businesses. And then the one key difference, I think, at the moment from Australia is that we've retained a funds management business. We've got this really great product in New Zealand, KiwiSaver. It's sort of it's the equivalent of the Australian super schemes. It's a very simple product. We don't have some of the issues around charging fees for advice and things like that. That's not been part of the construct of the market, and we see it as a really important part of our customer journeys, especially towards home ownership. You can withdraw your KiwiSaver to put a deposit on a first home, and then towards sort of long-term retirement savings. So it's a really important part of the overall financial well-being of our customer base.
Thanks very much for your time, Antonia.
Pleasure.